What if I told you the strongest regional property growth since the start of the rate tightening cycle is happening? Right now, while capital city auction success rates are slipping for the first time in nearly half a year. If you're watching the Australian property market, whether to buy, upgrade, invest, or just understand where the opportunities are, this week's data reveals a big turning point. Let's break it down. The quiet comeback. Regional Australia is surging again. Over the past 3 months, regional Australia has delivered its best growth in more than 3 years, with dwelling values rising 2.4%. But this isn't another COVID lifestyle boom fueled by remote work. This time, the drivers are very different. Affordability pressures in capital cities, tight stock levels, more borrowing capacity after recent rate cuts, competitive conditions in metro markets pushing buyers outward. Economist Caitlin Ezzi from Catality sums it up perfectly. Buyers are seeking value and accessible price points, and they're finding them in the regions. Top regional performers this quarter. Western Australia absolutely dominates. Kalgoorlie-Boulder plus 8.1%, Geraldton plus 7.4%, Albany plus 6.2%. And Albany isn't just a quarterly winner, it's the annual champion too. 23.3% annual growth. Fastest selling time, 11 days, low vendor discounting, 2%. Buyers are clearly flooding these markets. Why? Because the median values are still well below capital city prices, meaning lower entry point, strong demand, less stock, faster selling times, and in many cases, stronger yields than the capitals. Among the top 20 regional markets for quarterly growth, 19 of them have a median price below $1 million. That should instantly grab the attention of first home buyers and investors. Not all regions are winning. New South Wales takes a hit. While WA and Queensland shine, one region is struggling. Bowral-Mittagong, Niswalshun, 1.2% annual decline, longest selling time, 77 days, highest discounting rate, 5.4%. Still the most expensive regional market in the country, median price of $1 million and $159,000. This tells us something important. When affordability is stretched, demand cools, even in previously hot lifestyle destinations. Part 3. Regional rentals. Tighten again. Renters are feeling the squeeze. Vacancy rates down from 1.8% to 1.5%. Regions now below 1% vacancy. Rents still rising, especially Launceston plus 3.8%. Geraldton, 2.5%. Albany is 2.1%. But here's the twist. Even with rising rents, yields have slipped slightly. 4.4%, 4.3%, because prices are increasing faster than rental income. This is a classic sign of strong buyer competition returning. Part 4. Meanwhile, capital city auctions are cooling. On the metro side, last week delivered some surprising shifts. For the first time in 24 weeks, the combined capital city preliminary clearance rate fell below 70%, down to 69.2%. That's still solid, but it's a clear sign that buyer momentum is stabilizing after months of heat. Auction volumes down 6.7%, 2,988 auctions held nationwide. Fewer auctions in nearly every capital, but a rebound to 3,444 auctions is expected this week, the biggest since March 2024. City-by-city snapshot. Melbourne. Clearance rate, 69.7%. Volumes rebounding this week, lowest early clearance since the Melbourne Cup period. Sydney. Clearance rate, 68.5%. Volumes down almost 8%. Brisbane. Clearance rate, 68.4%, lowest in 8 weeks. Adelaide, clearance rate jumps to 72.6%, strongest performer again. Canberra, up to 67.8%. Perth, small sample, 58.3%. Collectively, this suggests metro markets are meeting resistance at current prices, especially with stock levels increasing toward the end of the year. What this means for buyers right now. Regional markets are accelerating, especially WA and Queensland, and still offering value. Capital cities are cooling slightly, giving buyers more breathing room. Affordability pressures are pushing people outward, and that trend is strengthening. Stock constraints are supporting prices everywhere, but most sharply in the regions. Investors are returning, which could tighten conditions again through 2025. Final expert insight. If you're looking to enter the market, whether as a first home buyer, upgrader, or investor, this is one of the most interesting windows we've seen in 3-4 years. Regional markets are rising fast. Capital cities are stabilizing, borrowing capacity has improved, investor confidence is returning. And historically, when regions move first, capitals usually follow. If you're planning to buy, invest, or refinance, and you want to understand your borrowing options in today's shifting market, we can help. At O Finance, we work with clients all across Australia, including regional areas, and we help you find competitive loan options based on your goals. There's a link in the description to book a free discovery call, or you can reach out through our website anytime at oofinance.com.au.